Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, May 6th, 2013. Well, a continuation of the trend to the upside today in a candle that's made a higher high and a higher low. Another white-bodied candle. Previous day's trading we had a very bullish candle where the buyers had control of this market, and the day prior to that I suggested that the market had built some solid momentum for a test on the 1600 level, and we did have a very solid bullish close up above that 1600 round number of resistance at 1600. For today's trading, however, we do have a very small body, and that does suggest that there is a possibility of a change of trend. We're not seeing the buyers maintain that solid upside momentum that they did for the previous day's trading, and that does raise some doubt about continuation of the trend to the upside. If we look at where the market closed within the range, it's closed around the midpoint level, and that suggests that neither side has taken control throughout the trading day, and the shadow on the top suggests that the buyers have lost some commitment. So really what we're seeing here is a lack of strength by the buyers. For the previous day's trading, the buyers had control of the market, and very strong control, and they've lost that control. So this market is set up for a potential change of trend. Now obviously if the trend does change to the downside, then we should be looking to the round number 1600 level as potential support now, and it should be very strong support if the market does test down to that level. Now in terms of the Fibonacci extension, and here we've seen the market maintain price action up above the 161.8% level. Previous day's trading we had a bullish close up above that level. Today we're not seeing any follow through by the buyers, we're seeing a loss of momentum by the buyers. But until we see that change of trend, our 261.8% target, 1633, is still in force. Now in terms of the Fibonacci retracement, we're in an expensive mode of that, and the market traded through the 161.8% level in a bullish manner for the previous day's trading, and now we have a target up at 261.8% at the 1623, 1624 level. The market may test up to that level, and if we see strong price rejection coming into this market, there may be a possibility of a change of trend. But at the moment we're not seeing any follow through, a lack of momentum by the buyers. They've lost control, so we may not see the market test to the 261.8% level. In terms of Ichimoku, obviously a bullish market in all three time frames. The market's trading up above the cloud, so we have a bullish market in big picture terms, a bullish bias. In the medium term time frame, we have the market trading above the Kijun-sen. That's the pink line here, and if we look at the angle of that Kijun-sen, it has flattened out. Previous to that it was pointing up quite sharply, reflecting very strong upside momentum, and this does show that the rate of change that we're seeing in the market for today's trading has slowed somewhat. So it does raise some doubt about continuation of the trend to the downside, but we will be looking for confirmation of a change of trend, which would be a lower high and a lower low. So we should be looking to the low of the candle and not react to any trading until we do see bearish activity down below that low. Looking at the Tenkan-sen, however, the green line here, the market is trading up above there, so we have a bullish market in the fast term time frame as well as the medium and the long term time frame. That Tenkan-sen is still pointing up quite sharply, so reflecting some good solid upside momentum in that short term time frame. But as I've mentioned, the buyers aren't backing this trend to the upside at the moment on this candle today in a very solid manner. Looking across here to the checkout span, it is above the corresponding price action, so it's confirming all of this bullish activity that we're seeing in this market. But here really the story is we should be looking for a higher high and a higher low, so the high around 1619 becomes very important for any potential test up to the Fibonacci levels that we looked at earlier. But also look to the low for a potential lower high and lower low. Potential retracement back down to 1600 where we should see support coming in, but we do need to react to this market as it trades throughout the day, and those two levels, the high and the low, are very, very important for this market moving forward.